Hello, Ornit. Hello, Yael. Hello, Shahar. Please take the stage, present yourself, and the panel.
Thank you, Tal. So, Shahar, Yael, great to have you with us. How about we start with introductions? Yeah.
Hi, Ornit. I'm Shahar. I'm Yael Safari. I lead innovation at FinTech-Aviv. At Discount, we do a lot of collaboration with the startup ecosystem. We do investment, mostly early stage, and I'm also responsible for open banking activities of the bank.
Hi, Ornit, great to be here. Hi, everyone. My name is Shahar Friedman. I head Visa's Innovation Studio in Tel Aviv. We focus primarily on engagement with startup companies, fintech companies, with great focus on commercial partnerships and venture investments. And also doing a lot of work on connecting startups, fintechs to Visa clients. So Visa globally works with 15,000 financial institutions. So opportunities for us to bring the Israel fintech ecosystem to Visa's clients across the world. Great to be here.
My name is Ornit, Shinar, and I run external innovation and venture investing for Citi in Israel. And I'm very happy to be here with you guys. It's been quite the year. I think, it's so many changes in so many fronts, some good, some not so good. And I think when we're talking about fintech, then this year has been quite interesting. I think some of the areas in fintech have really risen and done phenomenally well. A lot of money has been invested in startups in the space. And all in all, we're seeing, I think, big successes in areas like capital markets, digitization, etc. But would love to hear your thoughts a little bit and dig into what you think about what's happening in the space. And maybe we can start, Shahar. So BNPL, and I know it's a little bit of a pet peeve for you.
Yeah.
So it grew over 200% in the US last year, driven mainly by adoption from millennials and Gen Z. So why did it become so popular, and do you see this trend continuing?
Sure. So I think when you look at buy now, pay later, I think we've all seen the growth of buy now, pay later. We've seen a lot of fintechs like Klarna, Afterpay, and Affirm. When you look at from the consumer side, I think one of the main reasons that it's been so successful is the cultural element. So when you look at younger population in the world, I think they've grown into the subscription economy. So they've gotten used to monthly subscriptions for Netflix or other services. So with buy now, pay later, I think enables them to pay fixed monthly payments for purchases that they make online. That's one thing. Second is the element that it provides them the ability to budget and manage their spend with buy now, pay later, and also the transparency. So even though I think they do have credit cards, there's been this misconception they don't take credit cards. They do have credit cards, but with buy now, pay later, there's great transparency, and they know exactly how much they're going to spend. Plus the great user experience, which these fintechs can deliver with the solutions. From the merchant side, we see the ease of integration, and also these players, buy later players, that allow the merchants to increase the pie, grow volumes, and provide better conversions. It's kind of like a win-win for the merchant and for the consumer. I think we're going to see now buy now, pay later increasing or entering also into the in-store space, and also starting to see verticals for buy now, pay later, like car repairs, healthcare services.
Shahar, sorry, if you don't mind, can you try and talk to the mic, each one? It's muffled and people are having a hard time to hear you. So that's a shame.
Yeah, sure. So hopefully you can hear me better now. And I think what's interesting, I think also for us as a team, is talk about banks. So what's banks' position to buy now, pay later? I think besides some specific markets like Israel, Turkey, Brazil, maybe Greece, where buy now, pay later installments work naturally on the credit card's local payment system. In the rest of the world, we haven't seen a lot of successful buy now, pay later installment solution by banks. We're seeing some attempts by banks to launch buy now, pay later, especially from a post-purchase proposition to split your payment after the consumer made the purchase. We haven't seen a lot of scaling successes. I think what's interesting to see that, and I think it also ties to the other topics we're going to talk about, embedded finance and open banking, is that banks have the assets, they have the balance sheets to provide this proposition. I think where they struggle is to provide the the actual value proposition, the user experience, the ability to now provide like a pay by four with like very light speed or light process like risk scoring. So they know how to do like risk scoring with a lot of data, a lot of application, but when it needs to be like a seamless process, they struggle a bit. And I think it's interesting to see how one of the banks are going to react to buy now, pay later.
So I want to push back a little, Shahar, if I may. So when I look at BNPL, one of the things that I see is the fact that people are buying more and more without actually having good financial acumen and understanding if they're going to have the money to make it work out. So there's been a lot of pushback that it's leading to I'd say irresponsible purchasing. How does that sit with what you were saying before?
So I think that's an interesting point, and we are seeing kind of like regulation across the world, kind of like putting more, let's say, scrutiny on buy now pay later. So we saw the FCA in the UK now kind of like hinting that they're going to put some more constraints on buy now pay later. So I think these fintechs will be able to, kind of like adjust the proposition and kind of like anyway they'll play along the regulation. There'll maybe more scrutiny, but I think they're well set to continue growing buy now pay later. I mean, we're seeing how it's going in Australia, which is like the leading market for buy now pay later. It's continuing to grow. So I think even kind of like with the closer attention by regulators, we'll continue to see the growth of buy now pay later fintech providers.
I want to add one more note about banks' role in buy now pay later. And I agree with what Shahar said that until now banks weren't playing, and we see that the big players in buy now pay later were fintechs like PayPal and Klarna and Affirm and other companies. But I think that we see now more and more fintech companies that are trying to create networks that connect between banks that are lenders and the merchants, and they are kind of in the middle, and this middle layer can bridge the gaps between the merchants and the banks. So I think that we're going to see more and more banks into BPNL directly or through those networks.
Yeah, and I have to add, of course, that as Visa, going back to what Visa has launched the Visa installment solution, which is issuer-centric, so it allows issuers and consumers to leverage their existing line of credit, so kind of like saves the need to apply for a new credit with other buy now pay later solutions. The challenge here is kind of like to build that ecosystem on the issuer side and then the merchant side, but we know that like the schemes know how to do it quite well. So interesting to follow.
Moving on, yeah. Staying in the same area, but moving on to embedded finance. So we're seeing more and more consumer companies implementing financial services as part of their offering, using banking as a service platform. First, what do you think are the benefits of those platforms? Why is it growing so fast? And how do you see it regarding the current financial institutions? Is it going to be a real revolution?
So I think there's parts of it that are just obvious and they have to happen, right? We all want to be able to go into a taxi and not have to pay for it. Just, say where I want to go and do the financial thing behind it, just make it happen. And it sounds very normal in taxi. I say, oh, I just want to buy a house and let the money happen. And we all understand that it's a bigger amount and that there might be more thought that needs to go into that. But all in all, I think it's right. We do understand that you want to have a specific activity and you want that activity to be embedded into the whole thing, to be embedded into it, right? The whole financial process to be embedded into the activity you do. So I think I'm a big supporter all in all of this trend. I think it needs to be done well, and there are quite a few interesting startups that are doing a very interesting job in this space. Having said that, I think it's a great opportunity for banks. And when you look at it from a banking point of view, and it ties into all of the other things that we're saying, it's an opportunity to be able to actually be part of everything that happens. Sure, we don't expect to see people walk in to us and ask us to be involved. We now have to be outgoing and go to the clients to be there with them in their significant moments, but we can be. And I think that's a big difference. And if before we were sitting passively and hoping that the client would come to us, now we can be proactive and make sure that we're there for our clients in these significant moments in their lives, when they're buying a car, when they're buying a house, when they have a child, or when they want to put money aside to go to college. So whatever it is, we can be there helpful to our clients because we can base our understanding and knowledge on everything that's happening to the client outside of what's the four walls the bank branch. So I think it's a very, very good opportunity, and there's a lot more to that space, but I'm keen on seeing how good strategy teams in banks make use of this and take it to the next place.
I agree with what you said, and I think that it holds a huge potential for revolution in the way that banking services are currently working. I think that the potential is for every brand to become fintech, basically. Every brand could provide to its customers with financial solutions, and as more as those capabilities are becoming more and more easy to embed, then we can find financial services everywhere. And it applies to brands that are more tech-wise, and the big brands and the big techs, but it can also be embedded into companies and brands that are not coming from tech, like airlines, if we talk about payment and buy now pay later, or every other brand that can embed in their customer journey financial services. So I think that it's going to be huge.
But just maybe a quick challenge, because I think you both like represent big banks. So what do you think banks need to do to actually compete and be more active? Because I think what we're seeing today, let's take issuance in the US, right? And we know that banking as a service is getting more complex. Like each product looks different: acceptance, issuance, local payments, cross-border payments. There's overlapping between like providers. But from the bank's perspective, again, like in the US, it's more like the small banks, which are not like enabling or small medium in like US terms, like not the big banks. Some of them I think are, because of maybe some regulatory constraints, like so we know with issuance and like a cap on like debit card interchange. So obviously the fintechs are kind of like leaning to the medium and smaller banks, and some like the bigger banks are complaining about that. So I'm interested to see kind of like, what's your take on that? How can like the big banks make the move and like become more active to participate? Because I think there's like big growth opportunities for them, as you indicated.
I think today that we see a few types of players that play in that field. First of all, there are the brands that embedded finance. There are the providers of the capabilities, products and stuff. And here we see a lot of fintechs that provide those services and becoming this level. And there is the license. So we see the small banks like Cross River Bank and other banks that are providing banking as a service that can offer their capabilities and the license. And I think that we see the big brands like BBVA and like Goldman that have enough resources to invest in creating banking as a service infrastructure and really doing it very thoroughly and impactfully. I think that today we don't see the middle. We see the small ones that are involved in Citi, of course. That's why you're here, Ornit. So we see the big brands, we see the very small ones, and there is somewhere a gap where the fintechs get in.
I completely agree, and I would say that if you're looking at how BaaS is happening these days, and I'd say that the smaller banks are servicing the smaller fintechs or the smaller players, but if you look at what's happening with the very large players, big, then the large banks are the ones that are offering them those services. So it's not black and white, but I think more to the point of what you were saying, banks that will continue to do what they always did will be in trouble. And banks that see this as an opportunity and will seize the opportunity and make the different changes required to really leverage it and take it to the next place, they'll come out the big winners.
Okay. And maybe some last point more from like on the fintech perspective. So again, I think we're seeing like banking as a service provider. So I think we're going to probably see some, unbundling and bundling in the next 2 years, just because again, it's getting more complex. Banking as a service varies by the product, as we mentioned. And then when you add like other dimensions like consumer versus kind of like commercial or SME, geographies, local regulation, I think again, that kind of like, I think indicates that we're going to see some changes in that space in the next few years, just from like the fintech perspective. Okay, moving on, I think to open banking, and I think I like all the kind of like topics like tied nicely within this discussion. So yeah, open banking, what do you see so far, and where is it heading?
Overall, I think that open bank is here, it exists, and it's going to become more and more impactful. And I think the interesting thing about open banking is that it was first, at least in Europe, it was pushed by regulation. But now I think that there is an understanding of banks that it provides huge opportunity for them to collaborate with fintechs and to become and to create a much bigger ecosystem where all the partners can play, and they can play a very significant role in this new ecosystem through open banking. And I'll give some examples. I think that, first of all, when we talked just now about embedded finance, open banking for banks is the infrastructure to do embedded finance. And we already talked about it. The big banks are already there. The smaller banks have a challenge to do that because it's very costly and not so easy to implement. But I think that over time it will develop to that space that more and more banks will be able to embed their solutions in other companies. Second, there is a huge opportunity for creating an ecosystem and integrating third parties fintech solution to enhance the product offering of banks. And this is the way that we approach open banking at Discount Bank. Like we were doing 3 years ago, we were first in thinking about open banking way before regulation was set in place. We saw open banking as an opportunity to enhance our product offering, and we signed up with collaborations with fintech. Recently, we've signed up with a great company, very promising Israeli company called RiseUp, which provide cash flow management solution for retail customers. And it's a win-win situation for everyone because through open banking, our customers enjoy RiseUp great offering. RiseUp is happy because they have access to our customers and we provide them a lot of value. And our customers and us and everyone is happy in that situation. Okay. And I think that there is there is a lot of potential for banks to create value through the use of shared data.
It seems to me, I don't know what we think, but it seems to me like in Europe, like the technical framework is well defined, but I think we're missing kind of like more like the business model. And I think without like enforceable operational and like business model, I think it will be I think challenging to like make a great impact. So interesting to hear your take, and even like we can bring us to Europe. So in Europe it's enforced, and in the US it's not enforced, but we see like Play that being much more successful and making like much bigger impact, I think, than in Europe yet. So I think it's interesting to see how it will like play out, because again, when we have like the technical framework, I'm not trying to like what the business model and how far can it go without like a proper business model from the bank's perspective.
I agree. I think that it's interesting to see what happened, how it evolved in the US in a very natural way. Mm-hmm. Maybe because it's the amount of banks that some thousands of banks and then some kind of a play should have come up for other services to grow. I think that in Europe, regulation was forcing the banks, but I read some insights about what is happening in the UK, and it seems that it's catching up. And it's true that today the focus is still in Europe on the implementation of PSD2, data sharing, payments. But I think that there are some banks that are looking forward and thinking how to create a business model, because there is a potential for revenue share with companies. There is a potential of better usage of shared data. Talking a lot about open finance, which would open more and more opportunities, not only from the shared banking, but open finance in general. So I'm regularly for open banking. I think that over time, it's true that it's in Europe and in Israel, it's still early, but I think that if we look 5 years forward, I think there will be a lot of change in that.
Okay. And I think that just speaking of open banking and what we spoke earlier about buy now, pay later, so as an example, and also to Ornit's question about regulation. So actually, I can see how open banking can be used to like risk score a consumer, and then you can don't like impact implicitly their official risk scoring. So I think it's interesting as an example to see how like open banking can be used in other services, which some of them have already mentioned here in the conversation. So moving on to the next question. Ornit. Now that we're starting to see the economy resurging thanks to the successful vaccination operation, what are the key trends or lessons that are expected to stay with us for the long term, in your opinion?
So I think it's a great question. I think overwhelmingly, when we look at these changes, we always expect things that have completely changed to remain, and other things that look, minor, we think that'll disappear, and our psychological understanding of these things tends to be off, I would say. So for instance, a few months ago, I was talking to someone who said, oh, nobody's ever going to go back to bed and breakfasts, the cleanliness, the germs, this. And the reality of it was that the person who told me that was in the US, and in Israel was an opening, and finally we're allowed out. Everyone was running to bed and breakfast, and that's a great example of how people get confused on what will remain and what will not. I think that people have learned to work digitally. I think people have learned to trade online, and those capabilities will remain. Will people never again go to a branch? I'm assuming, but a large number better with things digitally, and it's been for all the digitization of large enterprises, I think, both in terms of investments and rollout of new solutions, and in terms of consumers being willing and able to use those new changes and capabilities. So I think that's here to stay. I'm not saying everyone will only do that, but it will definitely remain and is a big success for COVID. So an upside, something good.
Yeah.
But I think a lot of other things like the remote work, people are going to end up going back to work in part, completely, slowly but surely. I unfortunately think that people will end up going back to work completely. It's just, what will you tell your boss? Today's my hybrid day, I'm not coming in. I don't think that's tenable over time.
So I think, another example from like visa space. So looking at what we call, that was planned as part of the conversation, looking at what we call touchless payments. So I think we saw in COVID that people obviously prefer to not hand over the card and like pay with contactless or with a mobile phone. So very interesting, some interesting statistics that the Visa released last week is that last year Visa increased the contactless limit. So you can pay for higher amounts like with contactless without needing to enter your PIN, and now we're starting to see that in Israel as well. So in less than a year, we've seen 1 additional billion contactless transactions, which I think is a great number. And when we ask consumers, we also have seen that around 2/3, like 65% of consumers say they would prefer to continue paying with contactless. Today, 80% of actually in-store transactions across Europe are done in contactless, which I think is a great figure. And I'm happy to see it's also starting to pick up in Israel. They still call it Wi-Fi. I think it's some stores like you can pay with Wi-Fi. It's not Wi-Fi, it's contactless. But it's great to see it pick up finally and happening in Israel as well.
So we have literally 2 minutes left. So in those 2 minutes, we're going to do a different type of question. No big long answers, just if we shoot at you. What are trends that you think are going to come back, and give us, like really short answers. So Yael, a trend that you think is to be happening or that you're interested in now?
One thing I'm interested in most to see what's going to happen with digital currencies. I think it's a big question. There's a lot of forces for and against, and it's becoming more and more mainstream. But I think it's still fascinating to see what's going on with that.
Shahar, she stole the good one.
Yeah, so I think that's fascinating. On one angle is like we see like young people, millennials, are starting to put more money in kind of like digital currency. So it's interesting to see kind of like shifting from like regular deposits and traditional savings to kind of like investing in digital currencies. Another angle is the one called the CBDC, so central bank digital currency. Will be very interesting to follow how that plays out. China is kind of like the leader in like the most advanced market or country, kind of like already like piloting CBDC. We know that there are more countries which are active in that and looking to roll pilots. So interesting to see what will be the role of players like Citi and also Visa, kind of like that evolving ecosystem in CBDC.
For me, the big thing that I would say is alternative data. I think we've only just started to see the beginning of usage of that by everyone, including financial institutions. Where that goes is still, I think, super exciting and looking forward to seeing it. Thank you very much, everyone. It was great seeing you finally face to face.
Yeah, great chat. Thank you, everyone.
Thank you.
Ornit. Thank you, Yael. Thank you, Shahar. It was a great chat. And thank you, everyone, for our viewers. We're going to end this session and move to our next session with which is a keynote, the first SEC registered token IPO, INX. So thank you, your panelists, and we'll see you later in the during the event.